Has buying a house been tough? Has affordability been an issue for you? I have some really good news. There's changes coming that'll give first-time home buyers renewed hope in finally being able to achieve home ownership. Federal regulators are ordering Fannie Mae and Freddie Mac, the home mortgage companies that buy and guarantee mortgages, to eliminate upfront fees on many loans. This will help first-time home buyers, especially those who have been struggling to buy their first place. This is surely a welcome break for anyone who wants to buy a house but hadn't been able to because of the initial costs of getting a loan. The current housing market, with its rising home prices and skyrocketing mortgage rates, has made home ownership nearly, if not practically, impossible for more and more people. That's why this is a really big deal. The revisions to the pricing framework are expected to help 20% of home buyers wanting to get a federally backed loan. There's even more good news for first-time home buyers, with big changes coming in how a home buyer's credit is scored. Sandra Thompson, the Federal Housing Finance Agency Director, also detailed major revisions to lender processes when evaluating borrowers' creditworthiness. One of the most common barriers to buying a home is fear. Lots of people are afraid to have their credit scores checked. The goal of checking a borrower's credit history is really quite simple: to make loans to people who are less likely to default on that loan. The housing crash of '08 was in large part due to lax guidelines on how to determine if someone was in the habit of paying their bills. Add to that, people were getting much larger loans than they could actually afford in the long run. In response to the crash, regulators made it much harder to qualify for a loan, and it worked. Foreclosures remain at all-time lows. The newly updated approach represents a new take on credit scoring with the use of trended data, which includes how finances have been managed over the last 24 months or longer, including debt balances from month to month. This will give lenders more insight into how someone handles their finances. The classic FICO score will be replaced with two scores now, the FICO 10T and the VantageScore 4.0. The Federal Housing Finance Agency maintains the new approach is more inclusive because they can analyze new factors such as rent and utility payments. You may have seen TV commercials about boosting your credit. This is what they're talking about, but for home loans. Requiring both scores rather than a single score loan will help lenders manage risk while also responsibly expanding access to credit for borrowers with less robust credit histories. This also benefits people who have paid debt collection items and reduces the impact of unpaid medical debt. These two items alone are a huge deal. Thompson said although the credit scoring switch will be a multi-year process, the new fee reductions will be put in place as soon as possible. Here's where price changes will take place. Regulators told Fannie and Freddie to eliminate upfront fees for first-time home buyers, low-income borrowers, and underserved communities, with the goal being to promote sustainable and equitable access to affordable housing. Specifically, the fees to be eliminated are for first-time home buyers at or below 100% of the AMI, that's area median income. If you earn a little bit less than everybody else in the neighborhood, you'll be able to take advantage of this. Or less than 120% of the AMI of the high-cost areas. Think San Francisco. Now, the AMA is area-specific, so you'll need to talk to a lender to get that information. They'll help you determine what the AMI is. The fees will also be eliminated for Home Ready and Home Possible. These are Fannie and Freddie's affordable mortgage programs. HFA Preferred and HFA Advantage loans are also included in the fee cuts. These are typically loans that have down payment assistance, like maybe something that you'll get through the state. And finally, single-family home loans supporting the Duty to Serve program in support of manufactured housing and rural housing. Eliminating these fees is significant because the upfront fees that Fannie and Freddie charge as lenders added thousands in costs that were passed on naturally to the home buyers, particularly those with blemished credit making smaller down payments. Bob Broekschmidt, president and CEO of the Mortgage Bankers Association, said, given the ongoing affordability challenges facing home buyers, these targeted adjustments will improve access to credit for low and moderate income households, first-time buyers, and minority buyers as well. For lenders, there's a catch. Fannie and Freddie have been ordered to charge higher fees for most cash-out refinancing. Cash refis can leave borrowers at greater risk of foreclosure in a downturn because they're left with a much smaller equity cushion. When discussing affordability, we have to include the radically rising home prices in the conversation. Fannie and Freddie increased the conforming loan limit by 18% this year. Another increase is expected next year as well. Personally, I think there's a chance they may not be needing that because the home values are dropping like crazy these days, but we'll see. The bottom line and the really good news these changes bring is improved access to home ownership to more people across the country. This will stabilize housing costs instead of facing absurdly rising rents, putting more pressure on those less able to handle it. Finally, it looks like buyers are getting a break. They're actually getting a break. This is great. If you like this video, tell a friend, give it a like to help me spread the word, and subscribe so you know when the next video drops. As always, I appreciate you and your time. Thanks for watching. Talk to you soon.